Hello everyone, thank you for joining us on this Wednesday and welcome to this educational presentation of Are you missing the big trending moves? Now that's a question that's constantly emailed or asked to me from prospective students because they'll say things like, Steve, I was following this stock or this market and I wanted to do something, but I really didn't get a signal or didn't have a clear-cut idea. I thought I'd wait for the earnings to come out and then the stock or the future just took off and I missed that big move. Or else someone could say, you know what, I did buy something or I sold something and I got out too early and I missed this humongous move. For example, here's an older chart here. As we look in PDD, as we can see, it has a rather nice little movement upwards. And you think to yourself, well, I want to buy this. This is actually going up. Steve always says you buy in sync with the trend. But you want to wait. You feel it maybe a little bit too high. Maybe that guy in the chat room told you it should actually pull off a little bit and sell off a little bit. So you want to wait, and then this happens. And you say to yourself, you know what? It's too late now. This is where I was thinking about maybe selling it, so I missed the trade. Or did you really miss the trade? Well, here's a great opportunity for you, because even with aspects where you thought you possibly missed the trade, the strategy I'm going to be talking about today actually generates signals along the way. For example, it would have generated a buy signal right here, right when you thought you actually missed the trade and where you thought you would have been getting out. And you could have potentially captured this great move to the upside. So this is what we're going to be talking about today. You're going to see how simple it is to actually capture these large, big trending moves on our platform, the PTS Primo charting platform, the educational platform I designed with Pro Trader Strategies that really teaches you how to trade these big trending moves. So this promises to be a great presentation today. I want to thank you once again for joining us. My name is Stephen Primo, President and Founder of Specialist Trading. If you're new to my webinars, we are all about educating you. But if you've come here thinking that I'm going to tell you what to buy or sell the minute this presentation has concluded, or tell you what the perfect market is, you've actually come to the wrong place, because that goes entirely against our philosophy. Our philosophy is, in fact, you should never listen to anyone or anybody tell you what they think about a market or a specific stock or where to actually buy or sell. In fact, in my 43 years of trading, that is really what is at the core of most failures of traders, because you're taking yourself out of the game and you're basically giving your power away to someone you think knows all the answers, or to some master system that you think never fails. And think of it. Have you done that in the past? Have you spent thousands of dollars on this master trading system that really hasn't, really generated any of the gains you thought it would? Or have you followed some so-called trading guru and thought, well, this guy knows what he's talking about, I'll just mimic and copy whatever he does, and you really haven't seen the results you thought you'd see? Well, that's because you're taking yourself out of the game. So how do you get to be a consistent trader? Only one way, in my opinion, and that's by making your own trading decisions. The only trouble is most traders are afraid to make their trading decisions. They say to themselves, well, Steve, I don't have enough education. Or, Steve, I didn't graduate with a degree in business like you probably did. Or I wasn't on the floor of the exchange, so I don't know how to trade the way many other people do. So why don't I just have someone else do it for me? Well, trust me, I didn't have any experience coming into the game. I didn't graduate with a business degree. And when I was trading on the floor, I most likely did the exact same things that you're doing right now. Following the institutions, following the big banks, looking at earnings reports, looking at economic reports, listening to some trading gurus. In my first 2 years of trading, I couldn't make a dime. So it took me a while, but I finally realized that there is no consistency in those things. The only consistency is in what I was taught by my mentors, and that's sound fundamental trading ideas that have stood the test of time, and then they allow you to make your own trading decisions. This has been the cornerstone to sustaining me in my own personal trading for 43 years, and this is what we teach all of our students. All the things I've accumulated in my 4 decades plus of trading, and we simply teach you that so that you can ultimately make your own trading decisions. Once again, in my opinion, you're not going to be a consistent trader by blindly following some guy in a chat room or some guy on TV or some institution or some master indicator. You're only going to make it by using sound fundamental things that have stood the test of time, okay? Now, I'm going to share with you a great strategy we have that is based off those principles. But before we begin, once again, we are first required by law to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results that the strategy has currently generated. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. Now, if you haven't done so already, I invite each and every one of you to follow us on Twitter. If you're new to my presentations and you want to get a little bit more information about what exactly we do or our philosophy or our style of trading, there's a lot of great free educational information on Twitter. So you may want to copy down our handle right there. I post anywhere from signals our strategies have generated to little bits of financial wisdom on a daily basis. So you can kind of see what we teach and our philosophy on trading. So feel free to follow us on Twitter. Now remember, once again, we are a little bit different from other webinars you may have attended in the past. If you're here to think what I think the perfect market is, or what the perfect time frame is, or what the perfect stock is to buy or future to sell, once again, you've come to the wrong place. You should never, never, ever follow what someone else is telling you what to do. Trust me, I did that 43 years ago, and it cost me a lot of money. The only way that, benchmark that has sustained me for 4+ decades is by making my own trading decisions. So, as you can see here, my goal is not to force feed you signals, is not to tell you on a daily basis what to buy or sell, but my goal is simply to teach you how to trade with a specialist edge. It's the same edge that was taught to me some 43 years ago. Hopefully, it will be able to sustain you for that amount of time as well in your own personal trade. Now, since this is an educational class today, ask me as many questions as you'd like. I'm here to answer any and all questions, but please wait till the end. I don't want to stop for every slide. We'll be here 2 or 3 hours. I've done that in the past, and I've wondered why the presentations lasted so long, and that's because I was answering every question for every slide. Oftentimes, if you simply wait for the next slide, your question will be answered. So if you do have a question, please wait, write it down, or try to remember it, and I promise I'll get to it at the very end. The only question that is answered prior to the ending is this one, is our presentations, are they being recorded? Yes, they are. So if you have to leave early, or if you have technical issues with your GoToWebinar page right now, don't worry, we will send each and every one of you a link to this recording. So remember, please wait till the end to ask questions, and everyone will get a link to this recording. Okay, with that stated, let's begin. So I'm going to be talking about a brand new strategy we have. This is strategy number 10. Can you believe this? We have upwards of 10 different strategies, plus we have multitudes of different techniques and methods as well at specialist trading and pro trader strategies. But this is a brand new method, and it's entirely different from anything we've taught before. Let's talk about some of the highlights. It's entirely new because it's a short-term strategy. And someone's, I'm sure a lot of you would say, well, short-term, Steve, I'm not a short-term trader. I guess I'll exit this webinar. No, when we mean short-term, we don't mean that you're in and out of the trade in a couple of hours. What we mean is that the format, the requirements for this particular method are based entirely on short-term techniques. If you want to stay in the trade for 6 months, you can do that. I'll show you examples of trades that lasted months. But we're basically saying short-term, meaning that we do not require what we usually use in a lot of our methods. And the first thing is the buy-sell line. That's the 50-period moving average, which tells us the overall trend, sometimes going 3 to 6 months out. Well, we don't care about that in this. We're going to use our short-term trend identifier, which is the PET-D. This is a great tool. It's a color bar tool that we put together and developed at Pro Trader Strategies and Specialist Trading for identifying the short-term trend. Now, it's a combination, indicator-based and pattern recognition strategy. Usually when we have a strategy, it's based off a specific pattern, like strategy number 4 is a pattern recognition strategy. Or else we'll have an indicator-based strategy, such as strategy 3. But this is entirely different. It's mixing those two, an indicator and a pattern recognition, okay? Now, it's designed to trade in continuation with the short-term trend. When we mean short-term, once again, it's based off of what the PET-D is telling us on the short term. Because of its advantage to buying, and sometimes you can buy on the low, it does not, or I should say, you can apply option trading to this. It's great for option trading. In fact, we have a lot of option traders who are already becoming students of this. So it does not require you to buy when something is already taking off. You can buy an option with a low premium because many times the signals will be generated when the stock closed on its low. See, that's entirely different from what we talked about before. Now we have different versions. In the course, I teach you an aggressive as well as a conservative version because, once again, no two traders should ever trade alike. So we know we have some aggressive traders that want to get in and out as quickly as possible and go for the biggest gain. We also have some very conservative traders who say, listen, it's all about risk for me. I'm not concerned about hitting these home runs. I just want to manage my risk. Now, we also know that we have a lot in our database. We have a lot of students who are midterm to longer term traders. They're saying, Steve, I'm not concerned with the short term views of the market. I'm really here for the long run. I'm here to manage my IRA or to look at my long term portfolio. That's fine. And our methods work on those as well. But this is a great way to offset your long term investments as a hedge if you'd like. Okay. So this is a great way to have a shorter term method to offset your long term investments. Now, with all of our methods, we have a very high level of consistency. I know most traders would say, wow, that's great. That means you guys have a lot of winning trades, right? Well, sure, but that's not what consistency really means in regard to what we're talking about. Consistency is simply an awareness that you will have losses. That's really what consistency means. It's an awareness that there will be losses from time to time. But a consistent method is able to recoup those losses. You see, you don't want to be trading a method that's not consistent. Here's a perfect example of a non-consistent method. You have 3 or 4 trades and they just hit it out of the park. They make tons of money. You're thinking to yourself, my goodness, I'm going to retire in about 5 or 6 months. This is unbelievable. And then guess what? The next 3 or 4 trades give everything back. That is not consistent. But unfortunately, that's the way a lot of strategies and systems are set up to be. They go for the home run and then they give it all back in 1 or 2 trades. That's not consistency. Consistency is a 2-step forward, 1-step back approach. The 1 step back meaning that you are aware you will have losses. Consistency means that the method is able to recoup those losses. The quicker, the better, okay? So all of our methods, including strategy number 10, are very consistent. I'll show you that in just a few minutes. Now, let's talk about this process because it's an extremely simple process. Unfortunately, I cannot give you the rules. I've told you what is not included in this. We're not using the 50-period moving average. You don't need to see a bar close in the top or bottom 25% of its range the way we have in so many of our methods. This is entirely different and it's extremely simple, this combination process. But I can at least share with you a couple of the things included in the process. For example, the first thing we want to do is apply the PET-D. This is going to determine the short-term trend. Remember, how long you want to stay in the trade is up to you. The short-term strategy does not mean, well, that means I have to get out of this in a day or two. No, you can stay in it as long as you want. When we say short-term, we mean that the signals, the setup bars, are generated based off short-term benchmark or requirements. That's what we mean. And the PET-D is a short-term tool for identifying the short-term trend. If you're not familiar with the PET-D, let me give an example here. Someone looking at this would say, well, sure, we're in an uptrend, and I pretty much decided that after we made a higher high right here that we should be going higher. So usually traders will get into an uptrend right around this level. And then once they say that, yeah, we're in an uptrend, maybe I bought right here on this pullback or on this breakout, I'm doing pretty well, and then this happens, right? So what we want is a short-term tool that translates, not that predicts what the market is doing, but translates what the market is doing on a tick-by-tick basis so that instead of knowing up here that you were in an uptrend, it could have told you down here. And instead of finding out way too late that you were in a downtrend, it could have given you an early warning up here. Well, that's what the PET-D is. This is a tool I was introduced to some 4 decades ago on the floor of the Pacific Stock Exchange. At that time, when I was trading down there, we called it the formula because it was a formula you had to calculate almost on a tick-by-tick basis. But Pro Trader Strategies and myself have developed it into a color bar algorithm. We keep the calculation in-house because we want to make it simple for you. All you have to do is click on the PET-D on our platform, and guess what? It automatically changes the colors. So you can see here, we knew well in advance that the bars were green and we were in an uptrend. And we knew well before we hit rock bottom that we were changing to a downtrend because the colors turned red. With the PET-D, you'll only see green or red bars. That's it. Green for a series of uptrends, red for a series of downtrends. That's it. As it says here in the quotes, in my over 4 decades of trading, the PET-D is the best tool I found for capturing the short-term trend. So this is what we're going to base a lot of what a setup is, okay, using the PET-D along with strategy number 10. So that's the first part in terms of this process. Secondly, if we're looking for a buy setup, obviously we want to identify a shallow pullback, okay? We want to see that the bars are green and we want to see a shallow pullback. And someone could say, well, Steve, by shallow pullback, you mean like a sell-off, like what, like 3 to 5, maybe 10 bars? Well, usually A shallow pullback is no more than 1 to 3 days sell-off. Sometimes it's just 1 day and that's it. And someone could say, well, how do you know just based off 1 day? Well, that's where the combination of this indicator-based pattern recognition strategy comes into play. Those are the rules I can't divulge, but you learn all of this in the course. This is the process, though. Let's say the PET D colors the majority of the bars red. Well, what we want to do is identify a shallow pullback, this time to the upside, a little bounce in price. All right. Rather than being 5 or 10 bars to the upside, we're only looking for a 1 to 3 day bounce. And the rest of the rules, the requirements in the strategy will identify. So you'll know after 1 to 3 days whether a sell signal has been generated. Okay. That's how simple this is. So let's show you some examples in action, and let's start out with some big trending up moves, okay? Most of these moves happened within the last month or so. Towards the end of today's presentation, I'm going to show you some things that happened last week, okay, that had some really nice big uptrending and downtrending moves. But let's start off with some uptrending moves that happened within the last month. All right, so look in here at AMTD. We're only going to be looking at the last 6 or 7 bars. This is why we mean that we don't have to look back and say, well, Steve, how can I get enough information? There's not enough data. I can't base a decision off 6 or 7 bars. Well, that's why we say this is a short-term based strategy, because with our short-term tools, yes, you can. For example, the first thing we do is we add the PET D. And even though it looks as if we're going sideways, all of the bars are colored green. So the market is telling us, where most traders say, well, this is just a sideways market, nothing's happening. The PET D, the translator for the short term, is saying, no, we're in an uptrend. There's nothing to worry about here. There's no reason why you should ever look at the market to sell, because the short term is going up. And now if we apply the 2 rules, other rules remaining in the strategy, we see that a buy signal was generated here. Okay? This was in mid-November. So as you can see, we didn't close in the top 25%. The 50-period moving average is not required. So you can purchase a call option right here. You can actually buy the stock, but in the next week or two, you had a nice 12-point gain, okay, and a really nice upward move. Now, someone could say, well, Steve, what happened? What about right here? We had a red bar. Remember, we're only concerned with where the color is right in relation to the setup bar. Once the setup has been generated, we don't care if all the bars turn red. That's okay. We teach you this in detail in the course. Now, if you missed that, guess what? There was another up signal right here where you could have captured this move as well. Let's look at another example here. This was in BOLD, bold. All right, once again, we're only going to look at 4 bars here. I'm sure most of you are saying, wait, 4 bars? I can't make a decision based off 4 bars. Well, actually, yes, you can. Because once we apply the PET D, we see that all the bars are red. So wait a minute, you're saying to yourself, well, Steve, I thought we were talking about big up moves. How can we have a buy signal based on red bars? That's a very good question. Well, in fact, we didn't have a buy signal. We had a sell signal generated on the 3rd bar, just off this little small bounce on the 3rd bar. So remember I talked about consistency? Remember I said consistency doesn't mean that you have a ton of winning trades. Consistency is an awareness of losses and a method that's able to recoup those losses. Well, our first signal here at the beginning of November was a sell signal. And look what happened. We sold off for a day and then went up after that. If we used one of our basic generic stops, we have upwards of 7 different stop placements in our course for you to choose from. Let's say we use one of our most basic generic ones. That's a 4-point loss we took right there. All right? This is what we mean by consistency. Consistency means a method that's able to recoup the losses. So at this point, don't, start cursing at your screen and saying, I never win, I'm always losing, because a setup may be generated right around the corner. In fact, 3 days later, you had a buy signal generated. So rather than sit in the corner and sulk, you got to get back on the horse, because even though you lost 4 points, this may be what we talk about consistency, being able to recoup that loss. This was in the middle to end of November last month. You think you're going to recoup that 4-point loss with potentially capturing 31 points in the next couple of weeks? Now, there was some news that came out in bold that caused it to gap up. Students always tell us, how did you know it was going to gap up like that? We don't. We only listen to one thing. And I'll tell you what that is. Or first of all, I'll tell you what it's not. It's not fundamental news. It's not required in any way to look at earnings or buyout rumors or what the CEO is direction of the company's thinking about taking the company. We never look at that stuff. If you want to, you can. It's not required. Remember, our philosophy is to keep things as simple as possible. And once you start adding more and more things onto your plate, like listening to fundamental news, you make it more complicated and more wishy-washy. It's a lot harder to discern what the market wants to do because those things are too subjective. We only want to look at cut and dry things. And if you want to look at the most cut and dry thing, that's the chart in front of you. And you'll see how cut and dry this is when we share with you the rules once you become a course member. But this is a perfect example of what we mean by consistency. We lost 4 points. 4 days later, we had the opportunity to make it back and a lot more. Now, someone could say, well, Steve, so your exit was up 31 points? No, we have, once again, upwards of 6 or 7 different exit points. You could have made 4 points and say, well, I made back my loss, I'm out. Or you could have stayed and waited for this big upward move. It's up to you. Remember, I said in the very opening, the reason why most traders fail is because you're listening to someone or something else tell you where to buy and where to sell. All right? This is a recipe for disaster. We never tell our students around the world in over 115 countries and in every state in the United States, we never tell them where to buy or where to sell. What we do is we provide you with different variables and let you decide. 6 or 7 different entry points, 6 or 7 different exit points, 6 or 7 different stop placements. Each one has a different persona. Some have more risk involved. Some are more for in and out very quickly. Some are keeping you in the trade. Some are better for risk parameters. It's up to you. We work with you so you can decide which one makes you feel the most comfortable. That, in my opinion, is the only way one becomes consistent in trading the markets. Not by going to a chat room, not by listening to the institutions. Think of it. How do you make your decisions? Do you listen to some guys on TV? Do you go to a chat room? Do you have an online course where it teaches you what the institutions are doing? Those are silly. I traded those things 40 years ago. They didn't work for me then. So why waste your time and your money? All right, here's another example. ALLK. Once again, looks like we're going sideways, right? But if we apply our translator, which is the pet D, all the bars are green. So the translator isn't saying, well, sure, we're in a sideways market here, but the trend is up, meaning that the market most likely is going to be going higher. Now we apply the other requirements of this strategy, and we see that a buy signal was generated on the 3rd of December. It was just a couple of weeks ago. Think you would have liked to have taken advantage of that? Sure, you could have bought calls, right? Not a bad little day there. Did we have any idea it was going up 44 points? No. Some of our students who took this trade may have gone out with a couple of point profit. Others may have gotten out with 20 points. Others may have stayed in the entire day and taken 44 points. It's entirely up to you. The main point we stress is that you're not listening to anyone else. You don't care why this went up 44 points. When I get in trades like this, I really don't care what the reason was. Who cares? All I care is that I was in sync with the market. That's all it's about. There's always going to be a reason why something went up or went down. I really don't care. All right, here's another example. ICPT, okay? This was coming into November. It's kind of firming up here. It's slowly but surely going up. Maybe you think it's about to roll over. We have a little doji here. Maybe that's the top of this uptrend. You apply the pet D. No, the market is translating that it still has room to go higher. Now, sure, it could change its mind anytime by starting to share with you a series of red bars. But until it does, we're looking for buy setups. And there were a cluster, 3 buy setups right here using the new strategy number 10, based off the short-term requirements. All right, so you had 3 chances to go long ICPT, and a month later, it's up 47 points. You potentially could have captured close to 50 points in the next month coming into this week in December. It's up to you, though. Some of you would have gotten out with a 5-point game. Other would have wanted to stay in for 47. It's up to you. You are in charge. That's one thing you have to really come to terms with if you're a student of mine. I'm not going to trade for you. You have to make your own decisions. The good news is that we provide you with tons of information and then work with you so that you'll know what feels comfortable for you to decide on. All right, another decision. We're here, we're looking at this. We're saying, well, Steve, 6 or 7 bars here? Come on, it's going sideways. But we apply the pet D. The pet D is telling us we're in an uptrend. It may change any second, but for right now, even though it looks like we're doing nothing and going sideways, we are in a clear-cut uptrend. Why? Because the pet D is translating on the short term that the market wants to go higher. All right, we look to see if the requirements are filled, and yes, they are. It's a buy signal right here. This was on the 8th of November. 52 points in the next month coming into the first week of December, okay? To see how, you never have to play this victim anymore. That's why traders actually like to play the victim card, because when you start listening to someone or something else to make your trading decisions for you, what it does is it gives you an out. When you find that there's no consistency and you start going into a series of losses because these things really don't work the way they were supposedly advertised to work, well, this gives you an out because it wasn't your decision, right? You were blindly following someone or something else. So you can always say, this stuff doesn't work. Oh, it's a piece of you-know-what. They really are terrible. And it's not your fault that you lost money. It's their fault, right? But you have to take responsibility once you start making your own decisions. And a lot of traders are afraid to do that. They don't want to make their own decision because if they're wrong, there's nobody else to blame. You've got to blame yourself. The good news is that we teach you how to make your decisions based on sound fundamental things that have worked over and over and over again. So although we're not guaranteeing you that they work every time, they have a high level of consistency. And that's the beauty. Once you take charge of your trading, you're in for the ride of your life because you'll be able to finally become consistent, and you'll have no one to blame and you'll have no one to congratulate other than yourself because you made the decisions. All right, now if you missed that, guess what? The first week of December, it gave you another buy signal, and you could have taken advantage of this short one-day gain. All right, we looked at the up moves this last month. Let's look at some big trending down moves because remember, we don't care which direction the market goes. We're not going to sit here and go, oh, I only buy the market. I never sell it. If you want to, that's fine. But we know that there are a lot of traders that like to buy puts, that like to go short, that like to take advantage of the big downtrending moves. Now, we haven't had a bear market in almost a decade, a really strong bear market. So what happens when that finally comes into play? I'm not saying it's going to happen next week. It may happen next year. It may happen next decade. Who knows? But when it does, you have to have something that you feel confident in that you'll be able to short. Because in bear markets, there aren't these big upward moves. They're mainly to the downside, and they fool you. Every once in a while, you'll have a little bounce or a rally, and you think, all right, we've bottomed out. And then they go right back down. You have to be able to trade those markets to the downside. Strategy 10 does a great job of that. Now, we're in a bull market still, as you know. We're always making higher highs and higher highs. That's fine. But this strategy will still generate signals to the downside. Why? Because it's listening to the market. It's not listening to a bull market. It's not listening to the earnings reports or the economic conditions. It's only listening to what the market wants to do. If you're trading a stock that is in a downtrend, it's going to signal downward setups. For example, as we look here in PINS, obviously we've been going lower, and if we apply the PET-D, we see that the majority of the bars have been red. A couple of green here, but the majority are red. If we apply the rules, we see that we had a sell at the top here and a couple more sells. Had you taken this very first setup, well, potentially you could have captured 13 points coming in to this week in December. Let's say you missed this entire part. Well, guess what? There were 2 more sell signals still being generated. How about letter I? Once again, someone could say, well, Steve, this looks like support. We're basically going sideways. We haven't gone down. But if we apply the PET-D, we see that we have a kind of a splash of red, back to green, back to red. So which is the one we apply? Well, remember, for this particular strategy, all we need is for the setup bar to have the corresponding color. In other words, if you have a setup to go long, a buy signal, well, that bar needs to be green. If you have a setup to go short, well, that bar needs to be red. So once we apply the rules, we see that we had a sell signal here. Even though the bars after it turned green, that's okay. The sell signal was generated on a red bar. So if you had a wide enough stop, let's say you didn't get stopped out, maybe you did get stopped out, okay? All right, so let's say you lost a little money here. But then another signal was generated here based off a red outline bar. 20 potential points. You think you could have made back that initial loss? That's what we mean by consistency. Now, this was happening in November, the same time the majority of stocks were going higher. Here's another example in PLCE. All right, looks like we're in a little shortward downtrend, but maybe you think, well, Steve, that program, that online course I took about the institutions, they're saying that there's support right here, so I want to buy. And that chat room I go to says you got to be a buyer of this. But if we add the PET-D, we see that the last 3 bars have turned red. So what is the Pet D translator telling us? It's translated that the market has changed its mind and now wants to go lower. How long or how low, we have no idea, but for right now, it wants to go lower. So this means we will not look for any buy signals. We will only look for sell signals. And using what we teach you in the course, you identify a signal right here based off this one-day balance. Now, where everyone else is saying, but Steve, this is major support. All the big banks are buying here. And, you know, according to that chat room where the guy never loses, he says you got to buy this. Well, remember I said, I followed those same things some 40 years ago, and there was no consistency. I didn't start to become a consistent trader until I listened to the chart in front of me. So as we can see here, the strategy is based off of what the chart in front of me is telling me on the short term. And guess what happened? All right, now, let's say you take a nice profit here, and you're starting to say, well, you know what? I'm starting to get those reminders back from that chat room that this is major support. And that course I took says that the institutions are buying right here. So I guess I'll cover because I have a nice profit and most likely we're going to go higher. Once again, if you want to listen to those things, you are more than welcome to. Are any of our strategies based on that information? Absolutely not. We're only taking our cue from the source. The source is the chart in front of us. And guess what? Where everyone else thought there was support, 3 more sell signals were generated. So this is where traders would say, I'm not going to cover. I'm not going to take my profit because the market is still telling me it wants to go lower. And guess what? Had you stayed in from the beginning, potentially you could have captured 27 points coming into this past week. How about beyond? Okay, now obviously this has been going lower. And if we apply the Pet D, it's safe to say the Pet D has been telling us this the entire time. This is where traders say, but I missed this. Okay, the move's already been established. I'm not going to go short now because there's no way I'm going to make any money. Most likely it's probably going to stop and then go back up. Well, remember, we do not predict how low or how high something will go. We only listen to the market and then give ourselves some boundaries of where to exit and where to place our stops, okay? But guess what? A sell signal was generated right here at the very bottom. So it's up to you. You could have potentially captured 30 points had you taken advantage of that setup there in Beyond. And if you miss that, one more generated here. And if you miss that, another one generated here. All right, so let's look at some other markets because we know not everyone just trades daily bars and we know not everyone just trades stocks. Here's a 4-hour chart of the British pound this past week, I should say. We had 2 buy signals generated. All the bars are green. And in the next week, 360 pips to the upside, okay? That's over $3,500 per unit that potentially you could have captured. How about a 10-minute chart of the E-mini futures? Now, with strategy 10 really works best on these longer time frames from like hourly and above. It works best, in my opinion. By best, I mean that you get the best result, most consistent results on daily bars and higher. You can still apply it to short term if you like. Now here, look at all the signals that were generated on this 10-minute time frame of the E-mini. All right, this is going back to, I believe, the 9th of December, the 9th and 10th of December, which was just last week, last Monday and Tuesday. Had you taken the very first sell setup, 28 potential points in just a day, okay, a little over a day. That's $1,400 per contract that potentially you could have captured. Once again, it's entirely up to you where you exit and where you enter and where you place your stop. Now, we know we have some commodity traders here. If and when we go into a bad market, a lot of traders like to switch over onto tangible things like commodities. Do our methods and strategies work well there? Yes, they do. In fact, let's look at this chart here in coffee. Here's a daily chart of coffee in mid-November. Someone looking at this will say, well, yeah, Steve, okay, sure, this chart had a nice uptrend, but look at it, it's rolling over. We had a nice doji star here. It looks like we're just coming down. We have some bearish engulfing patterns. I think we're going to come all the way back down here. That report I read about coffee, supply and demand, says it's just too much. Price is going to come down. And I don't like what I see here in coffee with the fundamental economic news and along with the chart. Okay, there's no difference in analyzing commodities, futures, currency pairs, and stocks using the same outdated and worn out excuses because there's no consistency in those things either, regardless of what market you're trading. Remember, we only trade one thing, the source. And what is the source telling us? Well, we apply the Pet D, and the Pet D is telling us that we had a number of green bars and we only had one red bar. Is this enough to tell us that we're going down? Well, let's see where the signals were generated. We had a buy signal generated here using a green bar, and we had another one generated here. Now remember, we're only concerned with what the color of the bar is over the signal. Sure, the more green bars you have, the better, but all we need is what is over the signal bar. Now, we're not concerned with the bars that follow because we're already in the trade. We apply our stops, we apply our exits, and coffee went up 38 points coming into this week, all right, which represents thousands of dollars per unit you have trading coffee, okay? So do you think, you have to change your justification and your analysis because you changed the market? Absolutely not. The PET-D and these simple requirements analyze any market, and they're, in my opinion, the best results you'll see is off the higher time frames, meaning that anywhere from an hour up and higher. Once you start going to the smaller time frames, like 5 minute or 10 minute, it gets a little bit more scrambled because of the particular environment where you have these whipsaw environments. Okay, let's recap what we shared with you today. Here is the short-term setup process. Remember, the first thing you want to do is apply the PET-D because we're going to base our decisions off of the short-term trend. We're not using the 50-period moving average at all. Now, if the bars are primarily green, we're looking for buy setups. And how we identify them is by identifying a shallow pullback. That's a 1 to 3 day sell-off in a short-term uptrend or green bar. If we are looking at the majority of the bars being red, all right, then what we want to do is identify a shallow pullback. That's a 1 to 3 day bounce in a short-term downtrend or red bars. It's that simple, okay? It doesn't have to get more complicated than that. That's why we're not looking at news. We're not looking at institutions. We're not looking at volume. We're not looking at tons and tons of indicators. We're looking at a small but very simple process of combining an indicator along with a pattern to identify these setups. Now, before you ask me questions, I want you to ask yourself this, and ask yourself honestly. 2019 is almost over. In fact, we've got about 2 weeks left. Do you think this new strategy can help your trading going into next year? And by new, we mean very new. It's only a little over a month old, okay? All right, we have a great attendee discount for all of you taking the time out of your Wednesday to come and hear this special educational presentation. We have a great discount on offering you our strategy number 10 course, okay? This is an entirely new short-term strategy, applies the PET-D for the short-term trend. It's a combination indicator pattern-based method. We're going to give you all the complete course rules. We're going to teach you how to trade this aggressively as well as conservatively, so you can decide for yourself how you want to trade it. Now, the average trade lasts 1 to 10 days using a standard format, but you can be in it, as we have shown you in current examples, weeks, months, even years if you'd like. You can apply option trading to this. Because of the way many signals have been generated on the low end of the bar, that means that's a lower price premium in the option. So if you have a buy signal generated where you had a very strong down day, that means the premium on the option is really decreased and you can buy a less expensive call or put, okay? So this is our short-term trend trader, strategy number 10, a very new strategy. We only have a small amount of people trading this around the world right now because it's just, been very exclusive. We've only given a small amount of webinars on it. We really wanted to, debut it going into 2020, but we started to do it early just so that you could start the year off great. Now, remember, all the setups and all the displays, all the charts you saw today were generated using the PTS Primo charting platform. I developed this with Pro Trader Strategies so that you could really learn how to apply it and how to trade big trending moves simply by using our platform. So we're going to throw in 12 months absolutely free. It can be totally free. You can be using this and just everything is one click away, seeing the exact same examples, the way I trade this, the way we have students trading this, and you can get the exact same up and down arrows along with the PET-D. So here's what's included with 12 months, all right? Obviously, you're going to get the new proprietary strategy number 10, up and down arrows and the rules. You're also going to get the PET-D short-term directional tool, which automatically colors the bars green or red. And this is all one-click access. You just click on the tab and it automatically changes the colors and produces the arrows. You're also going to get a tool I developed with Pro Trader Strategies called our Strength of Trend feature. Many times, students are in these long trends and they're holding a position and they're saying, Steve, this is great, but I just don't know how much strength is left in this trend. Is there any way I can find that out? Well, we developed a tool called our Strength of Trend tool that really has an uncanny ability to tell you when there's still more momentum left or if it's running out of gas. This comes with our platform. You also have over 90 of the most prominent technical indicators, automatic exit levels. You know, remember, we say we give you upwards of 7 different ways to exit, but one of them we've automated so that it's on the platform. You can just simply click on the exit levels and it will automatically generate them for you. But here's the best thing I think about getting 12 months free of our platform. You have our signal scanner, okay? I'm really proud of this scanner. I use it on a daily basis because it is so simple to use, and we know not everyone is able to be in front of their charts all the time. So if you come home from work and you want to see what the next setups are for the next day, let me show you how simple it is. You'll click on this page. This is our scanner page, and all you have to do is just see on the right here, you have a series of green bars. Those are the buy signals for the next day in whatever market you've chosen, or the red bars, which are the sell signals for that day. Now let me show you what you could have scanned for this past week, all right? Here's a chart in LEA, all right? Looks like it's going up, but not enough conviction to really think that this is going to be a big move. So how could we have used the information we teach you in the course along with the scanner? Well, you could have applied the PET-D and said, well, the last 4 bars are green, okay. Then right here in the upper green strategy tab, you could have clicked on strategy number 10 and seen that a buy signal was generated. Now, if you had scanned the night before, it would have told you that as well. On the 10th, a buy signal was generated in LEA and 16 points in the next 4 days, okay? This was just last week. On the 10th, I believe that was Tuesday, you could have found out this information. Remember, we generate signals both going up and down. Here was another one is set up here in IFF. Looks like we're basically going sideways, maybe building some type of support. But if we apply the PET-D, remember on our platform, click on PET-D, you see the bars have turned red. So there's really no support here according to the market. The market is translating that most likely it wants to go lower. Click on strategy number 10. You see 2 sell signals are generated using the rules. Now, let's say you hadn't gone through that process. All you would have had to done is simply use our scanner, and the night prior to the 11th and the 12th, you would have seen that these were valid signals. You could have chosen any one of these, could have bought puts or actually gone short, and in 3 days potentially captured 15 points. This was coming into the 16th, which was just last Monday, okay? You know, I go to a lot of webinars just to see what people are teaching and what so-called educators are talking about. And many times they'll show examples like this, and then I'll look and see when they were generated on their platforms, and they were like 6 months ago, you know, or maybe a year ago. We always show you things that were generated not only within the last month, but sometimes within the last few days, because we want to just show you our sincerity. These things are happening all the time. I'm not going to guarantee that every trade is going to be a winner, but I showed you some losing trades in this presentation and how easy it was to recoup those losses. That's the beauty of our methods. They're very high in consistency, and they're very able to recoup those losses. Once again, we're inviting you to be one of the first to take advantage of this entirely new strategy, so you can start out 2020 in the right direction. Think of it. How has your trading been going this year? Most likely, if you're like most traders, it hasn't in any way reached what you wanted it to be. You're nowhere near the goals you set a year ago. Give yourself a chance to start 2020 in the right direction. We have a great offer for you so you can start trading this right away. All right, here's our short-term trend trader discount, okay? Because this is a new offer. Usually our pre-launch special price with the PET-D is $49.95, but we're not going to charge you that because this is, you know, offering with the PET-D. If you want all this and you want strategy number 10 rules along with the PET-D, you're only going to be charged $44.95. You're going to save $500, but you'll also be able to get payment plans. So for a small discount, you don't have to come up with $44.95. You can put a small percentage of this into a discount. You can still be up and running, trading this with the PET-D. Let's say you already own the PET-D. We know we already have a lot of students who are already trading with the PET-D. Well, it's not like you have to buy it again. Usually that would cost you $34.95. We're not going to charge you that. You're also going to save $500. We're going to charge you $29.95 for the course. And once again, if you can't come up with $29.95, we understand you'll also be able to have a payment plan. So for a small percentage of that price, all you have to do is put down a small percentage, a small price discount, and you will still be in the strategy number 10 course, okay? So we're making it really simple for you. We're discounting these by $500 each, but we're also giving you payment plans. So for a small deposit, you're still in there trading with this, and you can just establish a payment plan with Pro Trader Strategies. Remember, this includes 12 months of the platform for free. You know, that's usually worth $2,000 alone. So this is a really great offer for you to take advantage of. Here's the information if you want to do so. If you have more questions concerning the platform or pricing, contact Pro Trader Strategies. They're my sister site. They're in charge of all of the course pricing and course discounts and payment plans. So if you really are serious about taking your trading to the next level, I would strongly recommend calling them at 310-598-6677 right here and take advantage of a payment plan. They would be happy to give you information on what exactly you need to to come up with for a small deposit, and then you can be up and running as soon as today if you'd like, okay? Now, if you want more information on the information page of strategy number 10 and the link to that sign up, that's on the very bottom here below, but that's not a live link. You'd have to copy and paste that onto your browser. But if you look in the chat box on the far right of the GoToWebinar column, we have posted a live link. So all you have to do is simply click that on, and that will take you to the information page, okay? Now, I'm going to leave this information up here. I promised I would take any and all of your questions. So if you have any questions concerning what I just went over right now, I would go to the question and answer box that's in the far right-hand corner of your GoToWebinar column and just type them in right now, and I'd be happy to answer any and all. But remember, what we do at Specialist Trading and Pro Trader Strategies is break the questions into two categories. Anything concerning teaching and trading of the strategies, send directly to me, such as right now on the question and answer box, and anything concerning discounts, pricing, and tech support, go directly to Pro Trader Strategies, okay? That way your question will be answered much more quicker. Someone's saying, Steve, does this apply to daily bars of Forex charts? Yes, it does. I showed you that 4-hour chart in the British pound, I believe, of the Forex charts because a lot of our students like to trade 4-hour charts of currency pairs. But yes, we have students that also apply to daily bars, and we also have students apply to weekly bars of currency pairs, okay? So it makes no difference. Another student is saying, or prospective student is asking, Steve, what if I want to make a trade? Can I trade off your platform? No, our platform is simply an educational platform. In other words, this is where you get all the education. This is where you learn how to trade the strategies. This is where it produces the up and down arrows. What I do is I enter my trades through another a platform. That's my broker. But I also have my platform up at all times. So I'm scanning intraday at times. I'm also looking at setups on the charts. And then when I want to enter a trade, I simply toggle on back onto my platform that takes my trades. It's very simple. I would say the majority of all traders are looking at 2 or more platforms at a time. And this is the simple process in which to do it. So there's nothing wrong with continuing and keeping your broker, such as Schwab or Ameritrade or, it could be TradeStation, but you'll just toggle over and look for the setups on your platform, on the PTS Primo charting platform, okay? Someone's saying, Steve, what if I have a question? Oh, one thing I forgot to mention. That's a very good question. One thing I forgot to mention. Once you become a student of mine, you are a student of mine for getting educational correspondence as well. So not only are you a student of mine on the online course, you also get my personal email address, my private email, and you can email me anytime you'd like. We have students constantly emailing me all the time, and I want you to do that as my student. So we have a direct correspondence via email. So this is not something where you just only have the course as your source of information. You can always email me with any questions. So I'm answering questions all the time. You can email me over the weekend, during the holidays if you like. I'll try to get back to you as soon as possible, okay? Good question, though. So yes, I take all my email questions very seriously and get back to my students as soon as possible, all right? Okay, good questions. If that's all, then remember, one last thing I just really want to leave you with. Remember, we are at the end of the year. Most likely you're nowhere near where you thought you'd be, right? You thought you'd make that extra amount of money every month. You'd be able to buy that, maybe that new dream vacation you wanted to go, or maybe that new car you were thinking of. That's okay, don't worry. The majority of traders are experiencing the same thing. I did myself as well when I was first starting out. Don't get discouraged. There's plenty of stuff for you with what we teach and what we have for you at Pro Trader Strategies and Specialist Trading to take your trading to the next level. Strategy number 10 is one of the best ways to start out 2020 in the right direction. So even if you just have questions, contact Pro Trader Strategies. There's absolutely no obligation. They would be happy to answer any question without pressuring you into a sale. They can also answer questions about setting up a payment plan. They can let you know how much you'd have to come up with, a small deposit, in order to be up and running, okay? There's no obligation. They're qualified trading consultants manning the phones right now. So my suggestion is to call them. If you're really serious about taking advantage of this great offer, call them directly at 310-598-6677. Now, if you're serious about taking advantage of those setups that we just showed you that happened last week, remember, that's who to contact, Pro Trader Strategies. They would be happy to discuss and put together a payment plan for you. Okay, as we conclude then, I just want to say thank you once again for attending. I really wish you all the best of luck as you look at one more time at our disclaimer. But more importantly, I really look forward to all of you becoming students of mine in the new Strategy number 10 course, okay? Thank you so much for attending, and have a great day. I'll see you next time. Bye-bye.